Hey guys, this is Kyle from InvestiShare. I got a lot to share with you today. There's a lot of changes that's been going on in the market, in the background. So let's dive into it. So basically, what I want to go over is a macro potential setup that is being prepared for us right now as we speak. And we have a short-term price action turbulence. Basically, we're going to see potential drawdown a little bit depending on how the price action reacts to the structural point of control. But overall, things are looking pretty bullish. We have just recovered off the structural value area low. We have open interest, the weighted open interest on all exchanges flipping from positive to negative, which basically means that there are more people in shorts than there are in longs, and market makers love to hunt for those stop losses and for that liquidity, so they have some exit liquidity. So we are going to be likely seeing a lot of people get knocked out of the market. We have about $6 billion resting around 71,000. I have to double check that, but it's around $71,000. We have about $6 billion worth of liquidity waiting to be swooped up from the market makers. And the last time we had negative funding rates was in October 2023, and that's when price action was at around 28K. And when they flipped from positive to negative during that moment, we went from 28K to 48K. So there are a lot of bullish, there's a lot of bullish things that can come from that. So we're going to be looking probably for 80, 90K targets if we break this structural area. So I'm going to show you my screen. We're going to dive into the charts and then we'll see what we can find. All right, cool. All right, so this is the 1 hour chart for Bitcoin. I'm probably gonna be moving in right into the 15 in a moment. But if you see what we've got going on here, we have an ascending channel, a rising wedge, and its apex is really close to the point of control. And if you guys don't know what the apex point is of these uptrending levels of resistance and support, it's basically when the two trend lines meet. Price action doesn't have to, bounce around until it hits that apex point, but it does give you a timeline of when to expect the drawdown. And if you were to subtract, so you guys, especially those who've been in crypto space a lot longer than those who've been around the stock market and Forex, when we have those apex points in the crypto space, we normally break out about 30 to 40% prior to hitting that apex point, because crypto is known as the most impatient asset space in the world. So we don't normally meet those points, and we're getting close to those points now. So what we have going on right now is we have this uptrending level of resistance. It looks like we're getting some drawdown right now as we speak. If we have price action come down and meet around 65.8K, and we have lost this level of support, we might end up having enough momentum to break not only this level of support, but also get that lower low confirmation from the structural behavior that we've got going on. And what I mean by the structural behavior is basically we have price action coming. If we come down, we lose this level of support. We come down and we meet this horizontal level of resistance, and it flips as support momentarily. If we don't recover this area and we don't get a lower low, then what's going to be happening is we're going to get a confirmation for a lot of traders to enter a short, and it's going to draw down the price back into either the value area low of this area, or the point of control of this area, or this whole structural value area low, which would be the target of this rising wedge structure. And for anyone who's ever traded a rising wedge, basically the target is the bottom of the wedge itself, and this is where the consolidative point is for the rising wedge. But that's pretty much it for the bear scenario. So we're gonna be looking basically for that kind of behavior. We kind of want that bounce to occur so you have a good stop loss guard. You don't want it to go straight down and like that. You want to have price action either give us something like this or give us something like this, so we have some kind of structural guard for our stop loss before we enter into a short. But that's for the bear scenario. Now, what's conflicting about what's going on right now is 65.8K is actually a really significant level. we just bounced off of a previous level of support and resistance that's been basically controlling the price of Bitcoin for over a month now, since February, actually, February 28th. So actually, sorry, if we're going right to it, it's around March 4th when we started using this level and watching it for confluences in our trades. We can see that we have it acted as support, resistance. Got volume breakout from it, support, and support again. So this might actually allow us enough momentum to break out of this wedge to the upside and bring us to the point of control, when that's the area we really got to watch for resistance. If we get slammed down from this, it could either bring us right back into the structure and we start seeing all this liquidity be taken from here, and here, or what could end up happening is kind of the opposite scenario, what I showed you with the structural behavior right here. If we end up breaking to the upside, we'll see some sell walls develop in the order books around the point of control like we always do, and bring us down, maybe retest this level as a form of support, also validating this horizontal level of resistance to act as support, and bring us up for the confirmation and a great entry and a stop loss here, and we'll target the structural value area high, which is at 70,964, and we would ultimately hit this structural formation's target, which is at 69K, and we have the $6 billion worth of liquidity waiting to be taken at 71K. So either way, we have two very good scenarios that we're prepared for. If A happens, we do A. If B happens, we do B. We're not fortune tellers. We basically just use the charts that tell us what we should do and why we should do it. So that's pretty much it. We did have a little bit of a scalp this morning during the trade hunting call. We actually were trying to enter it off of this exact play, the bullish play that I was talking about here, because we've had a lot of confluence for a long. We've got this, we reclaimed 65.8K as support. We broke the downtrending momentum here. We've had the momentum honored as support, so we got in during the higher high, and we put our stop loss below it. And then we saw building sell walls right here, and then we ended up having to get out early. So we closed half when we saw the building sell wall. There was about 1,600 Bitcoin being ready to be sold. Only about 1,000 of that, so 600 of that was taken before we started getting some drawdown. And we had this tweezer reaction. That's when you see like almost flat level of resistance, and the next candle, the bearish candle, closed below the previous candle, and that's when we decided to get the rest out. So we made some small profits, but we still got paid. So that's pretty much it, guys. Those are the scenarios we're looking for. But overall, guys, things are looking very, very bullish, like insanely bullish right now. Doesn't mean we can't, get rejected at the point of control and come back down, and then maybe build a double bottom structure and have a lot more liquidity pooled here to be taken so we can have it drive us up towards 71K. But overall, things are looking bullish and not bearish. The fractalization between the previous bull runs and where we are now is mirrored almost perfectly. It's insane. Like where we are today compared to where we were. Let's go to the daily really quick. I know I show this a million times, but basically, we had the double top fear, right? Everyone's pointing towards stupid low targets that never usually get hit. And, instead we break to the upside. We have it honored as support, just like we did, here. Double top fear, break to the upside, go to the moon. And I bet you the funding rates were flipped from positive to negative during that moment as well. We can look at historical data to find that out for sure, so we can have some backing on that. And then same thing back here in this cycle, right? Previous high, trying to be honored as support, double top. This one played out, but we still ended up bouncing and going to higher highs. Now, if you were worried and you want to be prepared for the bear scenario, let me just show you. I know I got a lot of noise on the chart. I trade a lot. So if we end up, coming down from the point of control, and then we get the lower low, then you can prepare for the bear scenario. But overall, we've got a lot of support here at 57.3 and this uptrending daily momentum and confluence with that. And the longer it takes for us to get down there, the less likely it's going to happen. All right, so that's pretty much it, guys. If you have any questions about this, you can reach out to me in the Discord. Remember, safe trading equals profitable trading. You can reach out to me if you ever need help with anything. Remember, subscribe. It helps us out a lot. And have yourself a profitable day. Thank you. Bye.
Hey, yo, I'm all about the crypto. In case you don't know, it's the hedge new inflation, the crazy sweep on the nation. No baby, every blockchain ain't created the same, but the learning curve for